with this post from Donald Trump on the platform X, wherein he said that the idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar. They will face 100% tariffs. They should wave goodbye to America is how he ends the post. Khoon Goh, Head of Asia Research, ANZ Research, Johnson right now to talk about this and lots more happening around the world. Remember, as Samina said, geopolitical concerns are easing as well. But Khoon, good morning to you. Thank you for talking to us at NDTV Profit this morning. I mean, what do you make of this? We are entering a 4-year period wherein more eyes will be on Donald Trump's X handle than a lot of other things. But, you know, I've agreed this is negotiating tactics, agreed, this is rhetoric, but some of it might be actually used in a very effective way because of what's happened recently when China issued the dollar bond as well. Just try and break it down for us. What do you make of such a post from the President-elect of the United States?
Good morning to you. Well, there's no doubt that we have to get used and accustomed to these kinds of outbursts on social media from President-elect Trump. And I think it's a reminder of what the next 4 years is going to be like. Now, in terms of his latest pronouncements, there's no doubt that he loves tariffs, but his usage of tariffs now looks to be very different from his first term. In his first term, he imposed tariffs against China, which started a trade war. This time around, the tariffs that he has proposed is conditional, and is conditional on him trying to get other countries to do what he wants. In the case of Mexico and Canada and in China last week, it was around the movement of illegal migrants and drugs. And this time around, against the BRICS countries, is threatening 100% tariffs against them if they were to move away from the dollar. So clearly, the tariff is a big stick that he's building to try and get countries to, do what he wants. I think in the issue of the dollar, there's no doubt that there's been a shift towards, trying to reduce reliance on the dollar by many countries, particularly in the emerging market space, because there was concern that, the US has weaponized the dollar. It is very clear, of course, that, Trump recognizes this as a huge threat. The US as a reserve currency is in a very privileged position, and that privilege will be eroded if the dominance of the dollar as a reserve currency were to be under threat. So I think he's being very preemptive here in trying to ward off and starve off any attempt by other countries to move off the dollar standard.
Take a cue from what you said, and assuming this is not empty threats coming in from the incoming president, the hottest trade in 2025 then becomes the US dollar. But history shows that when the dollar gains strength, it turns out to become a hindrance for equity bulls. In that case, do you think the phenomenal run global equity markets have seen in 2024 may not continue into 2025?
Look, I think we have to distinguish between the dollar as a reserve currency and the currency fluctuations. The dollar will remain a reserve currency, but that doesn't mean the dollar can't weaken. And we've seen that time and time again. After all, the dollar does move in cycles. So at the moment, the dollar is extremely strong because of the tariff threat and the fact that the US economy is doing exceedingly well. But we do expect the Fed to still deliver another rate cut in December. And I am still of the view that the easing cycle is not done yet. So I think we're going to get further rate cuts from the Fed next year. I think that should help some moderating impact on the dollar. We expect the dollar, to ultimately still be beholden to the wider Fed policy. And on top of that, in terms of the US economy, if the tariffs do get imposed as what President-elect Trump is threatening, that's inflationary, but it also can have a softening impact on the US economy as well, which might start to pull the dollar slightly weaker. Lots of moving parts, of course. I think the only thing that's certain is that we're in for a period of heightened volatility.
Khoon, just one question. I mean, crude prices have cooled off because, amongst other things, Ukraine saying that if there is a NATO guarantee, then we are happy to end the war. We don't know how this will shape up, of course. Russian and Syrian jets are kind of also doing another conflict, if you will. But do you believe that geopolitics will not necessarily flare up the commodity universe, or could that still happen? Because of late, we're seeing more signs of an end to the geopolitical issues as opposed to them flaring up.
That's exactly right. I think we are much closer to the end of this long-running conflict than anything that we've seen recently. And I think market is starting to take heart from that, which is why we're starting to see that geopolitical risk premium getting unwound. In addition to that, the Middle East tensions also look to have subsided. And on top of that, we know that President-elect Trump's policies in regards to energy policy in the US is to, in his words, drill, baby, drill. So additional supply from the US also is another factor that is also weighing on crude oil. So that's actually quite positive, particularly for emerging markets and particularly for oil importing countries like India, because with oil prices well behaved, there's less issue in terms of the threat to inflation, and it can also help the overall external balance of payments position as well.
Thank you very much, Khoon. You have a good week, and we'll see you soon. Up until then, it's also happy December, so have a good festive month ahead.